Welcome back to another week of technical analysis of the three major indices. We are still in that very frothy zone. Last week I talked about how the volume has been dipping as the price was going up, and the volume's starting to perk up a little bit. So that is a slightly bullish sign. I would still personally hesitate to be investing in the Dow at the moment. It's going to have to correct, and when it does correct, it may take a while or it could drop suddenly. It's got about 5% before it hits this long trending upward support line. It could also just go sideways until it finally intersects with this support line. It might also just never hit that support line, but the key to figuring all of this out is to watch the volume. But if it keeps going up, then it will create a new pattern at some point. You'll either see people jumping ship or you'll see more and more people getting on board. Right now, it's a little frothy. It's a little bit unclear because it's in uncharted territory. It's an all-time high zone. And until it either makes a more substantial move up with big volume or moves back towards that support line, it's going to be hard to know exactly what to do. Now moving over to the Nasdaq. As I talked about recently, we had this symmetrical triangle which it broke through. And it broke through not on great volume, but solid volume. And that average volume is enough to keep the index going upward. But this uptrend is leveling off now. The time to have gotten into this was when it broke out of this symmetrical triangle. And if you had gotten in maybe even a day or two after, you would have had a 6% gain. So right now probably is not the time to jump in. It would be, in my opinion, gambling. We want to wait for these patterns. And in this situation, this was a textbook symmetrical triangle pattern with a breakout on decent volume. In fact, more than average volume. And as the price went up, the volume did start to go down a little bit, but it still stayed pretty strong. So you could have gotten in on the second day of the breakout and experienced a 6+% gain. That's what we're looking for. All right, heading over to the S&P 500, we have this super long-term support line, which we have not visited in a long time. Not since last October or November has it even been visited. But it's still a viable support, and if it breaks down through this pattern, that's the next place it could hit. I still have concern about this megaphone pattern because it continues to hit that top line, and the next move is most likely a bounce downward. I want to wait for a bounce, so if it bounces down, that's a big wait. If it breaks through this resistance, that's very bullish. You could move this upper resistance here and make a case for, well, it's got several touches here and it already has broken through this upper resistance. Very possible. However, as the pattern changes, if I can still get 3 on the money touches like this, I've got 3 solid touches, then the pattern is still in effect. If it continues to break through this, then we will no longer have 3 touches and it will nullify the megaphone. At the moment, it's a wait and see until we get a really clear picture of what's happening with this megaphone pattern. If you have any questions about the indexes or technical analysis, please put them down in the comment section below and I'll be sure to answer them. Please subscribe to get all of our latest videos, and don't forget to hit the like button below if you enjoyed this video. Thanks for watching, and I'll see you next time.